WeWork is gearing up for its IPO. It filed to go public Wednesday after losing $1.9 billion last year. It follows several other big money-losing companies like Uber and Lyft that have also gone public this year as well. The filings reveal some lofty goals. It says its mission is to elevate the world's consciousness. Clare Sebastian joins us live now. We'll get to that in a second. But just talk to us about the losses, because that is what investors are going to care about. What is their path to profitability?
It's very unclear at this point, and they say it themselves in their IPO filing. They say that we have a history of losses, and especially if we continue to grow at an accelerated rate, we may be unable to achieve profitability, they say, for the foreseeable future. So there's really no outlined path to profitability in that. But what they're saying is, we've got all these locations. There are locations now in 111 cities in 29 countries. Their growth is impressive. They say they've been growing their membership at more than 100% a year since 2014. They now have 527,000 members. 38% of the global Fortune 500 now are involved in WeWork. But the problem is that only 30% of their open locations are what they describe as mature, meaning that they're generating stable revenue. So that is a bit of the problem. Plus the fact that they have all these leases on all these buildings that are 15 years plus in the US. The leases and their obligations there far exceed the time limit of their membership. So they've got lease obligations of $47 billion, and they've got backlog of revenue from members is only $4 billion. So I think that is a key issue with the business model that investors are really going to be focused on.
But one thing that's interesting is that they're expanding beyond just leasing out office spaces.
Right.
They're involved in schools. They're going to be involved in a whole host of other things. Is that what they mean by elevating the public consciousness?
So this is the word that they like to use is community.
Okay.
This underpins all of their ventures. Obviously, with WeWork, you have lots of different companies working in the same facility. They share, kitchens and meeting spaces and things like that. And they're applying the same principles, for example, to apartment/hotel models. So they've got these two locations that are called We Live, where people can rent out apartment spaces for short or long term. They do things like share kitchens. They have bars. The whole point is to build community feel, and they have a school as well for kids that's called We Grow. It's in New York City. It's called a conscious entrepreneurial school. It's kind of the more Montessori approach. It aims for kids to kind of discover their own potential. So this is all part of this kind of lofty community-based mission. There's also We Rise, which is not really mentioned in the prospectus, but it's kind of more wellness focused.
And just talk to us about the economic environment for a company like WeWork going public right now. I mean, if you look at what the Dow is doing, it's down 700 points. We're in the middle of a trade war with China. What kind of environment is this?
It's tricky. I mean, it hasn't stopped a lot of companies from going public this year, the likes of Uber and Lyft, but they've had trouble since going public because these valuations are so huge.
Uber's first day of trade was rocky.
I mean, that did also coincide with a kind of a gloomy moment, shall we say, in the trade war. So there is that risk that based on the timing of their IPO, that could impact their success. But I think there is more skepticism now, given the broader macro environment on Wall Street, for these money-losing companies. I think it's going to take extra faith to give them the kind of returns that they're looking for.